This hearing will come to order. This morning we will consider the nominations of Ms. Jelena McWilliams to be the Chairperson of the Federal Deposit Insurance Corporation, Dr. Marvin Goodfriend to be a member of the Board of Governors of the Federal Reserve System, and Mr. Thomas Workman to be a member of the Financial Stability Oversight Council. Welcome to all of you, and congratulations to you on your nominations. I see friends and family sitting behind you, and I welcome them here as well today. We're fortunate to have three highly qualified individuals to consider for these positions, which are critical to ensuring a safe, sound, and vibrant financial system and a healthy, growing economy. I'm particularly excited that one of these nominees, Ms. McWilliams, is a former staffer of mine and is no stranger to the members of this committee who have been on this committee for over the past several years. Ms. McWilliams did outstanding work while she was at the committee, and I'm fully confident she will bring the same diligence, work ethic, and intellect to the FDIC that she showed here. In addition to working at the committee, Ms. McWilliams also worked as an attorney at the Federal Reserve during the financial crisis, and she currently is the Chief Legal Officer, Corporate Secretary, and Executive Vice President of Fifth Third Bank. These varied experiences have provided her with the particular background and expertise needed to run the FDIC. As head of the FDIC, Ms. McWilliams would be in charge of administering the Deposit Insurance Fund. And additionally, in its role as a prudential regulator, the FDIC plays a critical role in ensuring the safety and soundness of the financial system, while also promoting economic growth. Dr. Goodfriend also has an impressive background, having worked at the Federal Reserve Bank of Richmond for close to 30 years. He's written extensively about monetary and regulatory policy, and he's testified before this committee in 2016. The Fed is currently in the midst of normalizing monetary policy by winding down its balance sheet and raising interest rates after years at the zero lower bound. With respect to regulatory policy, the Federal Reserve is reviewing many of the rules put into place following the crisis. If confirmed, I look forward to working with Dr. Goodfriend on further regulatory and monetary policy improvements. And finally, we will consider Mr. Workman to serve as the independent insurance expert on the Financial Stability Oversight Council. The Council is charged with identifying risks and responding to emerging threats to financial stability, which has significant implications for both banks and non-bank financial companies. Mr. Workman will be well-equipped and is well-equipped to fill the insurance expert role, bringing over 4 decades of practical insurance industry experience, including serving as the head of a major New York State insurance trade group representing over 70 life insurance companies. During my meeting with Mr. Workman, I was encouraged by his commitment to independence and his desire to facilitate better collaboration between regulators and with regulated entities. At this time, I ask unanimous consent to enter into the record 17 letters endorsing the witnesses. Without objection, so ordered. Congratulations again on your nominations, and thank you and your families for your willingness to serve. Senator Brown.
Thank you, Mr. Chairman, for convening this hearing. Thanks to the 3 nominees. I had interesting discussions with each of you. Thank you. Thanks for your willingness to serve the public. Thank you to your families for being willing to support you during this. 10 years ago, January 2018, Bank of America announced it would buy Countrywide, which at the height of the bubble was financing 1 out of every 5 mortgages in America. At that time, Wall Street thought it was a rare business opportunity, but it only took Countrywide a few months to go from a darling of bank analysts to an anchor around the nation's largest bank and a threat to our economy. The consumer advocates knew that Countrywide was peddling predatory loans. Wall Street and regulators all failed to see how a large regional mortgage lender could pose a threat to a $1.7 trillion bank and to the wider financial system. That's why we passed Wall Street reform, to hold watchdogs and large banks to a higher standard, especially when things appear to be rosy. Now, 10 years later, the crisis has faded from memory. Bank profits are back to record levels. Big tax cuts, especially for large financial institutions, are on the way. But at the same time, the same consumer advocates have warned us about Countrywide, are cautioning us not to roll back the rules. Too many policymakers have forgotten the lessons of the last crash. I talk often in this committee about the collective amnesia we have about what happened a decade ago. But Ohioans haven't forgotten. While banks got bailed out, executives made off with golden parachutes, families at kitchen tables in Cleveland and in Mr. Workman's Columbus and Ms. McWilliams' Cincinnati, families at kitchen tables across Ohio were left with impossible choices. Should we pay our mortgage or our medical bill? Should we buy our prescription drugs or make our car payment? Ms. McWilliams, if confirmed, you will be in a key position to ensure that this never happens again. You'll follow in the footsteps of two dedicated public servants, Marty Grunberg, a Democrat, Sheila Bair, a Republican, who led the FDIC through the most challenging period since the Great Depression. You know that. I hope you take their counsel. I hope you listen to their counsel and take it seriously. You'll be charged with stewardship of our nation's community banking system. We know that when Wall Street creates a crisis, small banks are dragged down with a sinking economy. During the last crisis, we lost community banks across Ohio, in Lakeview, in Cleveland, in Milford, in Parma, in Westchester. This committee has heard a number of times my recalling the year 2007 and the zip code where I live, 44105 in Cleveland, Ohio. The first half of that year, there were more foreclosures than any zip code in America. Financial crises are a large part of why, at the same time, financial crises are a large part of why there's so many fewer community banks serving small businesses and families today than there were 30 years ago. Dr. Goodfriend, I appreciated our amiable conversation in my office, but I'm troubled by your long-held views on our nation's monetary and regulatory policies. You've questioned the Fed's mandate to fight unemployment. You've suggested a regressive tax on the cash in workers' wallets. You've endorsed legislation that would gut the CFPB and undermine the institution for which you work. I'm worried that if confirmed, you would not defend the independence of our central bank. You seem to be more concerned with threats of inflation than you are with people losing jobs and livelihoods. Mr. Workman, thank you for your service and your long career in Ohio and your service to our country. Many people back home expressed their appreciation for your qualifications. You made quite an impact when you were in Ohio. I'm interested in learning about how you would shift to this new watchdog role, how you'll protect our economy when FSOC is dismantling our post-crisis reforms. Look at the Treasury reports coming out of Secretary Mnuchin's office, all about deregulation. From deregulating AIG, whose toxic credit default swaps amplified the crisis, to dropping its effort to regulate MetLife, I'm concerned that FSOC is abandoning its mission in only 12 months of the Trump administration. Hardly clearing the swamp, the White House looks more like a retreat for Goldman Sachs executives. Much like the run-up to the 2008 crisis, Wall Street profits, household debt are at record highs. Corporations and the wealthy are enjoying windfall tax cuts. Meanwhile, working families haven't seen a raise in 15 years. As policymakers, I expect each of you to resist the collective, all-too-present amnesia that has settled in across Washington, D.C. I expect you to use your positions to make the economy work better for American families. Thank you.
Thank you, Senator Brown. And at this point, we will administer the oath. Would each of you please rise and raise your right hands? Do you swear or affirm that the testimony you are about to give is the truth, the whole truth, and nothing but the truth, so help you God? And do you agree to appear and testify before any duly constituted committee of the Senate? Thank you. You may be seated. Your written statements will be made a part of the record in its entirety, and as I always do, I encourage you to remember to follow the clock. We've allocated each of you 5 minutes. We'd like you to stick to that for your oral presentation so we have plenty of time for questions from the senators. And with that, Ms. McWilliams, you may proceed.
Thank you, Senator. Chairman Crapo, Ranking Member Brown, members of the committee, as a former staff member, it is my privilege to appear before you today. I'm truly honored and humbled to be the President's nominee to lead the Federal Deposit Insurance Corporation. I'm grateful to the President for this nomination and grateful to Senators Crapo, Shelby, and Olympia Snowe for the opportunity to serve our country. I'm forever indebted to these public servants for their trust and confidence. I'm also grateful to my family. They're sitting behind me today. My father, Obra Dobranik, a World War II veteran who taught me that nothing can substitute personal integrity and work ethic. My mother, Branka, who taught me that I can do anything I aspire to do. My daughter, Maya, whose humility reminds me every day to be a better person. And my brother, Nenad, a beekeeper and a great father. Without them, I wouldn't be here today. My father was born in 1925 in impoverished Montenegro. He was born in a kingdom, fought fascism and Nazism in his youth, survived communism and socialism in adulthood, and is finally living out his golden years in a democracy. It was his difficult journey that was pivotal in my decision to leave the former Yugoslavia for a system built upon the rule of law. In 1991, on my 18th birthday with $500, I left the former Yugoslavia and arrived in the United States. Appearing before you 26 and a half years later is nothing short of an American dream. The FDIC is an independent agency created by the Act of Congress to maintain financial stability and public trust by ensuring deposits, examining, regulating, and resolving financial institutions and managing receiverships. I believe that my background and professional experience have prepared me well for this challenge ahead. I currently serve as Chief Legal Officer, Executive Vice President, and Corporate Secretary of Fifth Third Bank Corp. In Ohio, Cincinnati, Ohio. I serve on the bank's executive committee and advise the management, senior management, and the board of directors on legal, compliance, and regulatory matters. In addition, I oversee a staff of 70 attorneys and support staff. Prior to joining Fifth Third, I had the honor and the privilege to serve on this committee under then Chairman Shelby and Chairman Crapo in various capacities, most recently as Chief Counsel and Deputy Staff Director. My experiences on this committee and as a staff attorney at the Federal Reserve Board of Governors have prepared me uniquely for the challenge ahead to lead the FDIC in its mission to protect the financial stability of the United States while making sure that the availability of consumer products is available to a broad swath of consumers, focusing on consumer protection and making sure that the deposit insurance fund is equally protected. Also, having served as a corporate officer of a regulated entity, I have a 360-degree view of our regulatory system and the entities that regulate it. If confirmed, I'm confident that I can execute the FDIC's mission effectively. One of the side effects of the civil war that broke apart the former Yugoslavia was a total collapse of its financial system. My parents' meager savings were wiped out overnight when a local bank closed its doors. Yugoslavia did not have deposit insurance, and as a result, my then 68-year-old father went to work as a day laborer. I can assure you that the FDIC's mission resonates profoundly with me on a personal level, and if confirmed, I will not take this mission or my duties lightly. Thank you.
Thank you. Dr. Goodfriend.
Chairman Crapo, Ranking Member Brown, and members of the committee, thank you for the opportunity to appear before you today. I'm honored to have been nominated by President Trump to serve as a member of the Board of Governors of the Federal Reserve System. None of this would have been possible without the support of my best friend and wife, Marcia, who is sitting behind me, and without the support of my sister, Miriam, who is watching at home. I would also like to recognize my parents for developing in me at an early age a keen interest in public policy. As the nation's central bank, the Federal Reserve has many responsibilities that are at the foundation of our economic prosperity and well-being, guided by the goals of maximum sustainable employment, price stability, and financial stability, and with lessons from its past, the Federal Reserve must be alert to future challenges. I've spent my 40-year career as an economist focused on central banking in general and the Federal Reserve in particular. The Federal Reserve Bank of Richmond had been my primary place of employment for more than 25 years when, in 2005, I joined the faculty of Carnegie Mellon University in Pittsburgh. I've written about and contributed to the policy debate from both inside and outside the Fed. If confirmed, I look forward to putting my knowledge and judgment, developed as both an academic and practitioner, to work as a governor, and to contributing my voice and experience to addressing current policy issues. I intend to draw on my academic and professional experience to promote policies that would further increase transparency and accountability at the Fed. My years at the Federal Reserve Bank of Richmond gave me a deep appreciation of the role of a regional reserve bank in the Federal Reserve System. The regional system encourages diverse perspectives and innovative thinking. As a member of the Board of Governors, I would look forward to hearing and considering this diversity of views in making policy. I have also gained policy experience at other government and central banking institutions. These experiences range from being a staff economist for the Council of Economic Advisors in the Reagan administration, to serving in central bank advisory roles and participating in external reviews of several central banks abroad. My publications use monetary theory, central bank practice, and Federal Reserve history to investigate policy issues. I've enjoyed my past 12 years teaching courses in monetary policy, money and banking, and international trade and finance at Carnegie Mellon Tepper School of Business. I would like to thank the committee for the opportunity to appear before you today for considering my nomination. If confirmed, I look forward to working with you in the years ahead. I would be pleased to answer any questions you have. Thank you.
Thank you. Mr. Workman.
Chairman Crapo, Ranking Member Brown, and members of the committee, it is my honor to appear before you today. I am grateful to be President Trump's nominee for independent member with insurance expertise of the Financial Stability Oversight Council, and I thank you and your staffs for helping me prepare for this hearing. First, I would like to introduce my wife, Pam, who is here behind me, and our son, Chris, who is also here today. Pam, my forever friend and life partner of 52 years, is a professional artist who paints still lifes and portraits of strangers. She is a lifetime mother and educator as well. Our son, Chris, is a partner at MSD Capital and a U.S. Army veteran who served as a tank platoon leader in the 1st Armored Division. His wife, Catherine, is a developmental pediatrician and neonatologist. They have 2 children and live in New York City. Our daughter, Sarah, is the mother of 4. She is a lawyer and the founder and leader of Postpartum Society of Florida, helping mothers suffering with postpartum depression. Her husband, Mark, is a facial plastic surgeon, and they live in Sarasota. I would also like to recognize Roy Woodall, the current independent member of FSOC, right behind me here. He is also a former Kentucky insurance commissioner. And our good friend, Lee Covington, a former Ohio insurance director. Lee. I grew up in north central Ohio, 2 miles from the Leesville Rural School that I attended. My father had a small Chevrolet dealership, and my mother worked as a mother secretary and bookkeeper. My sister Elaine and I both graduated from the Ohio State University, and after law school there, I served nearly 4 years as a captain in the U.S. Army Judge Advocate General's Corps. Then I returned to Columbus to practice law at Bricker & Eckler, the firm founded by John W. Bricker from Ohio. He was a 3-term governor and 2-term United States senator. With my office next to his for many years.
And if I could interrupt, the vice presidential nominee in 1944, causing the only time Ohio didn't vote for the winner in the 1944 presidential election. Sorry to interrupt. I would never interrupt a witness in the middle, but I had to.
Thank you, Senator. That's very helpful. I thought about adding that, but, you know, there's a limitation on time, so.
Well, we'll give you a few extra seconds.
Okay, good. Thank you so much. With my office next to his for many years, I am certain that he would be delighted that I am before you today. The first question I was asked at the firm was, would you do some insurance work? I spent the next 26 years doing insurance regulatory, legislative, and business-related work, including many areas: formation of companies, licensing, admission, sale, acquisition, rehabilitation, liquidation, reserving, state taxation, agent licensing, governance, underwriting, claims, admitted and non-admitted assets, and more. I also represented the Association of Ohio Life Insurance Companies and developed the firm's insurance law practice. I served on the board of the Ohio Farmers Insurance Company for 24 years. Formed in 1848, it is a leading Midwestern multi-line property casualty insurance company. I chaired the Governance and Nominating Committee, served on the Compensation Committee, and twice served on the committee to select a CEO. In 1999, I was recruited to become president of CEO of the Life Insurance Council of New York. For the next 17 years, I was involved in nearly all regulatory and legislative issues related to life insurers in New York State and to a large degree nationally. With 43 years of working with insurers, regulators, and legislators in New York, Ohio, and other states, I have, in effect, prepared to be the FSOC independent member with insurance expertise all my life. I know insurance and how vital it is to families and businesses and to our economy. I have great respect for insurers and the regulators and legislators who wrestle with insurance issues. They all share the same objectives: to assure promises are kept and customers are treated fairly. The purposes of FSOC are to identify risks to the stability of the U.S. economy, to promote market discipline, and to respond to emerging threats. The independent member exists to make sure someone with substantial insurance knowledge takes part in FSOC deliberations affecting insurers and insureds. I am grateful for the support of Roy Woodall, and I aspire to perform this duty as masterfully as he has. I am also grateful to report that yesterday the officers of the National Association of Insurance Commissioners authorized me to tell you that they believe I am a well-qualified candidate for this position, and they look forward to working with me. I would greatly appreciate this opportunity. If confirmed, I would be dedicated to the highest level of honorable public service. Thank you, Mr. Chairman, Ranking Member Brown, and members of the committee. I look forward to answering any questions you may have.
Thank you, Mr. Workman.
Sir.
And I will start the questioning, and first I'd like to go to you, Ms. McWilliams. Improving economic growth has been one of the key priorities for Congress over the past year. And one way to improve economic growth is by addressing areas where financial regulations can be improved. Financial regulation should promote a vibrant, growing economy while still assuring a safe and sound financial system. If confirmed, what will be some of your key priorities?
Thank you, Senator, for that question. If confirmed, I would like to focus on the regulatory burden on community banks. There has been a tremendous trend in consolidation of the community banking sector over the past 3 decades, and especially since the financial crisis. I would like to also focus on the NOVO charters for community banks. The only way to aid in the formation of the community banking sector and its expansion is to create more banks. From 2000 to 2008, the FDIC has chartered a number of FDIC-insured de novo banks, and since 2009, there have been only 8. That's a problem because we lost hundreds and thousands over the last 30 years. Additionally, I would like to focus on the cybersecurity issues and how they impact the banking sector in general, and especially community banks. And I would also like to take a look at how some of the international regulatory framework, like Basel regulations, affect community banking sector.
Thank you very much. And Dr. Goodfriend, what are some of the ways to improve the transparency, accountability, and communications at the Federal Reserve?
Thank you for the question. There are 3 ways in which I think transparency could be improved. One of them would be, and we can talk about this in more detail, around the stress tests. The second one would be around a reference rule, which we might consider. And the third would be around what I call the boundaries and clarification of resolution policy.
Well, thank you. And if we have time, we'll get into that. But we're limited to 5 minutes up here ourselves, so I want to move on to Mr. Workman. In your opening statement, Mr. Workman, you stated the independent member exists to make sure someone with substantial insurance knowledge takes part in FSOC deliberations affecting insurers and insured. Can you discuss in more detail how you envision your role on FSOC and what type of expertise you bring to the council?
Mr. Chairman, I would begin by just saying that the first duty, in my view, is in this role to be independent, to be truly independent, and also in that role to be working diligently for the public interest. My only interest would be the public interest. Having 40 years of experience in insurance, I can put that to work in the interest of Americans. As far as steps that I would like to take, I believe that there is a continuing need for more transparency in the process. I recognize that much of the activity of FSOC cannot be public. It has to be kept private. However, I think more knowledge among regulators and among the insureds and insurers is helpful. Also, I believe more engagement with the primary regulators, and in America, we're talking about state insurance regulators, more collaboration with them and with the entities that are under consideration. And also, I think attention to, particularly in the area of designations, considering a cost-benefit analysis. And then lastly, what occurs is, I think, an overarching interest in promoting a level playing field in the marketplace.
Well, thank you. And I'll finish with you, Dr. Workman. I've got about 30 seconds left. But as you know, FSOC has designated 4 non-bank financial companies as systemically important financial institutions, and subsequently voted to rescind designations on 2 of those companies. In November, the Treasury Department published a report with a series of recommendations to improve the designation process. What are your thoughts on the current designation process for non-bank SIFIs? And I apologize, you're going to need to do that in about 15 or 20 seconds.
Sure. Mr. Chairman, I think the key point I would make is that the Treasury put forth the concept of considering an activities-based or an industry-based approach, looking at products and activities. That's something that the IAIS is also doing. I think that is an area that does deserve consideration.
Senator Brown.
Thank you, Mr. Chairman. Mr. Goodfriend, you've previously dismissed financial regulations saying, quote, the only way that consumers, households can be protected against finance, against purchasing consumer products, against anything in the market is by being demanding shoppers. The whole philosophy of regulation, still your words, seems to be that the government can protect consumers from themselves. I think that's wrong. If we turn that around, that would do a lot to move us in another direction from the European socialist model that the government needs to be our protectors. So I guess you're saying, end quote, we should let demanding shoppers decide which banks are sound and which are the next countrywide. So does that mean that you think that the job Ms. McWilliams, the agency she's been nominated to, is just a bad idea, shouldn't exist?
Let me start again with what I think about these matters. I think protection of consumers is incredibly important, not only for consumers, but for the market economy. And what I meant in that context was that regulation, to the extent that it focuses on firms, and which is a good thing, to create standards and
Wait, I'm not going
reliability.
to let you filibuster this. So I'm sorry, and you can tell me your whole philosophy, but I'm reading your words, and you are saying that the consumers should be demanding shoppers. So does that mean that the FDIC is simply not necessary because consumers should figure out which of these banks are about to go under?
Absolutely not. Consumers need to be informed, and the other half of regulation is informing consumers about the products that they are choosing between. That was the point that I was making in that comment.
Okay, well, I'm sorry. Do you think that we're on a path to the European socialist model in this country?
No, I don't.
Okay, because it sounds like you might sort of think that. Maybe this nomination has illuminated some things. If we gut regulations and consumers are supposed to use their purchasing power to demand safer financial products, shouldn't we prohibit mandatory arbitration agreements that deny consumers their day in court?
So if confirmed by as a governor, I will look into that matter. It's not something that I've thought about.
Okay. In 2011, you told the Wall Street Journal that, quote, inflation scares are likely to recur and become more severe. You remember, amnesia around here aside, just 2 years earlier when President Obama took office, we were losing 800,000 jobs a month. It began to turn around with the auto rescue. In 2010, we've had month after month, consecutive months in through this first year of the Trump administration of economic growth. So that was the state of the economy. So keep that in mind when you said, so and I know you've studied the risks and drivers of inflation, but you stated also many times you believe the Fed would be better off with a single mandate focused just on inflation rather than a dual mandate, which includes full employment. In a May 2012 interview, you called the idea of getting the unemployment rate then at 8.1% to below 7% a, quote, a Herculean task that could lead to rising inflation that would be disastrous to the economy. At the end of 2017, unemployment was 4.1%. The inflation rate remains below 2%. Why were you so wrong so many times?
Senator, throughout this period of the last 10 years, I've been commenting on monetary policy. I'm not going to fill the essence of Federal Reserve's position to stimulate the economy was based on years of generated credibility for anchoring long-run inflation. That credibility was critically important in order for the Federal Reserve to keep stimulus in place for the last few years without generating inflation until we brought the unemployment rate down to something in the vicinity of.
So would they have done so well if they had listened to your warnings that we should not have a dual mandate, we should only focus on inflation? Would this economy be in this good a shape if they had listened to Martin Goodfriend during this period?
The questions that I was answering were academic. The dual mandate is very well. It works because the two goals of low unemployment and low inflation are complementary. And that's exactly what was the case in the last 2 years.
That's what you say now, but you say they're academic. You were in an academic setting, but now you're in a policy-making setting, if you're confirmed, and you still seem to hold this view, or do you reject that view that there shouldn't be a dual mandate? Will you say to us, absolutely there should be a dual mandate with equal emphasis on inflation and unemployment?
I absolutely agree to that. In fact, I talk about inflation because the key to getting unemployment rate down over the past 40 years in the U.S. has been credibility for low long-run inflation. And that, again, is why we were able to keep stimulus in place for the last 5 years, 10 years.
Okay, last question. Discussing inequality, you said you need to at all times talk about what's good for the country as a whole. You can't worry about how to help people who have less unless you try to make the pie as big as possible. It's a fairly easy question for me to answer about basic indifference or unconcern about addressing inequality. We know the recent tax cuts, 81% of the recent tax cuts go to the wealthiest 1% in this country. Doesn't your view have the potential to make inequality worse?
Senator, I don't believe the things that I say about monetary policy have bearing on income inequality. What the Federal Reserve wants to do is to create the lowest unemployment rate that's consistent with price stability. That's what our tools are designed to do, and that's what I would do if confirmed by as a governor. So
Mr. Chairman.
Senator Shelby.
Thank you. Mr. Chairman, I think all three of these nominees are eminently qualified by their experience and education and everything. And of course, we both know, and a lot of us know more than a little about Mrs. McWilliams, who served ably, honorably in this committee. Welcome back. I also congratulate you on your nomination, because you're going to take a big pay cut, all of you will, and so forth.
I'm used to it, Senator. Thank you.
Thank you. I'll pose she worked for us, both of us, so your money was not forthcoming, I can tell you that. I've been a long advocate, as Mr. McWilliams, as you know, for cost-benefit analysis. Senator Crapo got into that a minute ago. For all government rulemaking and regulations. Right now, we're focused on the Financial Regulation Authority. How important is cost-benefit analysis in the decisions that come before the FDIC? I'm going to pose this to all three nominees. Ms. McWilliams.
Thank you, Senator, for that question, and thank you for your words. I believe the cost-benefits analysis is crucial for an agency, and here's why. While I was at the Federal Reserve, we worked on consumer protection regulations. And if we did not do an appropriate cost-benefit analysis, we wouldn't know how a consumer would, in the end, be affected by the regulation. And I was taught at that point in time that consumer credit is like a balloon. If you squeeze it here, it will come out there. And before you squeeze it, you better know who's going to pay for it, how it's going to come out, and are you comfortable with the outcome. So I do believe that proper cost-benefit analysis benefits the consumer as well as the ability of the financial institutions to provide the lowest cost products and services to their base.
Dr. Goodfriend, as the Federal Reserve, as you well know, we've been talking about cost stability and full employment, stability of the monetary system and full employment. But the Federal Reserve is also a huge bank regulator. What about your view on cost-benefit analysis? Should it be done, and should it be done right, and should it be transparent, too?
Absolutely. I think cost-benefit analysis is important to decide which regulations to be put in place, which are deserving, which are not. I think my impression is that the Federal Reserve's moved in this direction, and if I'm confirmed as governor, I would help it move in this direction even further.
Mr. Workman?
Yes, sir.
In your work, it'll be a little different from theirs, but in some ways overlap. What about cost-benefit analysis?
Yes, Senator. That is, I think, a critically important element of the analysis that I would want to make, and hopefully the council would as well.
Dr. Goodfriend, we talked about this a little earlier. Could you elaborate before the committee today how the modern economy may have changed the way global indicators are viewed? And could you describe your views on the Federal Reserve's objective regarding price stability?
Yeah, the global economy has become much more integrated over the last 10, 20 years. And many people think that that may impact the Fed's ability to stabilize the U.S. economy. Mm-hmm. My view is that that's not really the case. We have what we call flexible exchange rate system, which I believe gives the Federal Reserve the independence to act on domestic issues irrespective of globalization, at least for monetary policy and price stability.
Mr. Workman, I'm trying to move on because I've just got a few more seconds in my time, but do you agree with me that the banks are one entity, insurance companies are another, their structure is different, their role is different, their obligations are different, and so forth? Yes,
Senator, they are functionally different. They have a lot of similarities, of course. However, the significant difference is the duration of the risk. For example, a life insurance company could have 40 years, 50 years of bearing risk, and it is not as able to be subject to a run much like a depository bank would.
Should that all be taken into account when you're making a designation?
Senator, indeed. And I think that's part of the role that I would need to
You will
play.
be playing.
Yes.
Thank you. Thank you, Mr. Chairman.
Thank you. Senator Menendez.
Thank you, Mr. Chairman. Dr. Goodfriend, during a hearing last May, you called the Federal Reserve's dual mandate, quote, incoherent, and you suggested eliminating the full employment mandate. You said that, quote, whether or not unemployment is 1% or 20% over a sustained period of time is largely due to factors outside of monetary policy control. However, in a speech last June, Governor Powell said, quote, the problems that some commentators predicted have not come to pass. Accommodative policy did not generate high inflation or expensive credit growth. Rather, it helped restore full employment and return inflation closer to the 2% goal. So do you disagree with Governor Powell's assessment?
No, I don't.
And so then your analysis was incorrect then?
No, I'd like to say that I regret the word incoherent. What I was talking about was, in the long run, it's inconsistent for the Federal Reserve to control both employment and inflation. The Federal Reserve has agreed, most central bank economists agree, that over the long run, central banks can control only inflation. But that is not a statement against the dual mandate. Again, what I believe is true is it's critically important to anchor long-run inflation in order to get the capacity for monetary stimulus to drive the unemployment rate down to the natural rate or to the vicinity of full employment.
Let me follow up on Senator Brown's questions about your Bloomberg quote when you said it's really doubtful whether or not the Fed can achieve 7% unemployment. Even if the Fed did succeed, it would give rise to a rising inflation rate in the next few years, which would be disastrous for the economy. However, today, that's your quote. I'm taking it straight from Bloomberg.
Right.
However, today unemployment is 4.1%. Inflation is still running below 2%, despite the fact that the Fed waited more than 3 years after that interview to increase rates. So knowing what we know today, do you honestly still think the Fed should have followed your advice in 2012 and raised rates before inflation neared its target?
No, I don't. But those statements are out of context. What I was warning about was, in the past, the Fed has had trouble getting unemployment down. And the reason was we had zero interest, and we had lost the stimulative power, the ordinarily stimulative power of monetary policy. My point was in the context of that conversation, and
Can you point out any, with all due respect, and I'm sure academically there's no question that you're a very bright person, but how am I not to hear everything you said in the past and then what you're saying today as a confirmation conversion about the dual mandate obligation that
again,
the Fed has?
it's not my, what I am saying is that the history and thinking about monetary policy has said, if we want to get unemployment down to the natural rate, to the vicinity of full employment, we as central banks need to stabilize long-run inflation
But
expectations.
can you give me
That's all I'm saying.
Can you give me anything, quote, show me, direct me to anything that you have said in the past that suggests that you support and affirm the dual mandate of the Federal Reserve?
I can show you some publications in which the point of my work was to say, our goal is to get unemployment down to the natural rate, and therefore I'm supportive of a long-run inflation target. I've worked on that for decades. It's proven to be the case that has worked in the last decade, and I'll stand by that. Whether or not I've talked about the dual mandate, I totally support it. And in fact, the reason for stabilizing inflation over the long run is exactly to make the economy operate at full employment.
Right, let me turn to Ms. McWilliams. The administration is actively searching for ways to diminish banks' responsibilities to serve those very communities through undermining the Community Reinvestment Act, something that many of us strongly support. Shouldn't the administration be focused on strengthening not weakening, a tool that ensures banks are held accountable for serving low and moderate income communities? And what assurances can you give us that the FDIC under your leadership will guarantee banks are meeting the home mortgage, small business, and other credit needs of low and moderate income communities?
Senator, thank you for that question. The Community Reinvestment Act is the law of the land, and it is a duty of the Federal Deposit Insurance Corporation to follow the law of the land. The unbanked and underbanked communities are a vital part of our economy, and I can tell you for a fact that a number of banks are seeking opportunities to bank those communities, not only for the purposes of the CRA, but also because they need to expand their customer base, and that's the organic way to grow the company. I can also assure you on a personal level, as somebody who was a part of the low and moderate income community, that the mission of the CRA resonates profoundly with me on a personal level as well. And I can give you my commitment that I will ensure that the FDIC fully executes the mandate of the CRA.
Thank you for that. Thank you, Mr. Chairman.
Thank you. Senator Toomey.
Thanks, Mr. Chairman. Dr. Goodfriend, would you agree with the characterization that a stable currency, in our case, obviously the dollar, a long-term stability in the currency is a very, very important condition for maximizing employment?
Absolutely.
And therefore, if you had a sustained policy where you deviated from that stability for whatever reason, even if it were for a good intention, like maybe lowering the unemployment rate, but if in the process you undermine the stability of the dollar, wouldn't it actually be counterproductive for employment?
I do believe that that's true.
And the last time in the U.S. that we had an extended period of very high inflation, I believe was the 1970s and early 80s. What was the unemployment rate like during that period?
On average, 2 or 3 percentage points higher than it has been since price stability.
Yeah, so I think it's an important point that we should all keep in mind. Price stability is a necessary condition for maximizing employment. With respect to the recent history of the Fed's behavior, I've been concerned about what the Fed has done, the completely unprecedented history of the monetary policy, including monetizing the debt of our government, which I think is a fair characterization, increasing our balance sheet to over $4 trillion. And it's true, there's been no recent huge run-up inflation, but can anybody say with certainty that we're not right now living with some asset prices that could be vulnerable? Sovereign debt prices are pretty hard to explain, actually. Equity prices are extremely high. Some real estate markets. Can you be certain that there are no bubbles out there?
No, and what I hope to do if I'm confirmed as governor is worry about exactly this kind of issue and to try to do the best I can to guide interest rate policy on the basis of incoming data to balance the goals of sustainable maximum employment, which is kind of where we are, keeping inflation low, and also worrying about financial stability, because that's an equally complementary part of the Fed's mandate.
And I'd also like to suggest one other consideration, which is just that it strikes me as a dangerous idea for the central bank to be purchasing assets like mortgage-backed securities, which end up being an allocation of credit decision, which should be left to the market and not to the central bank, in my view.
I agree with that, and the Fed, to my understanding, has a policy of aiming to get its balance sheet back to what we call all treasuries.
Right, thank you. Ms. McWilliams, thanks for taking the time to have a chat recently. I enjoyed our discussion in my office. I wanted to follow up on the issue that you raised regarding de novo banks.
Yes.
As we discussed briefly, it used to be routine in America that 100 or more community banks would be launched every year. And it struck me as a wonderful mechanism to bring credit to growing communities wherever it was needed. But as you pointed out, for something like the last 9 or 10 years, I think we've averaged about 1 per year, as opposed to over 100 per year. Now, some have suggested that's just because interest rates have been low. And I'll concede that that may have contributed to discouraging new startups, but I'm also convinced, as someone who has a community banking background, that the regulatory burden has also contributed to the lack of new banks. Is that your view, and do you have any specific ideas on how we might be able to relieve that burden, keeping in mind that these institutions are not systemically important even to their community, much less the country?
Senator, thank you for that question, and thank you for our discussion as well. I absolutely agree with you that the Novo charter banking has been an issue that's been on my mind for a long time, because we need to replenish the banks that actually closed down because of various circumstances. I do believe that regulatory burden plays a key component of the consolidation in the community banking industry, and if confirmed, that is something that I would like to take a look at. Especially, I would like to take a look at the capital and liquidity requirements on community banks and understand how the Basel framework applies to those banks. A number of the Basel requirements are not applicable to community banks, but nonetheless, while I served on this committee, I have heard from a significant number of community banks that the Basel requirements do apply to them, even if it's not by regulation, it's by the trickle-down effect. So I can commit to you that it is something that I will willingly and gladly take a look at and take under consideration if confirmed as chair.
Thank you very much, Mr. Chairman. Thank you, and I would just observe, I think we have 3 terrific nominees here.
Thank you, and I agree. Senator Tester.
Thank you, Mr. Chairman. The first question is for you, Ms. McWilliams. The FDIC completed the Agrippa process last year. A portion of that review talks about synchronization and streamlining. And I believe it is key that the regulators do work together to make sure that regulations are not duplicative. It is a major complaint that I've heard from my community banks. As FDIC head, what would you do to ensure that the examination process is modernized and that there is duplication is eliminated as much as possible?
Thank you, Senator Tester, for that question. The FDIC chair also sits on the Federal Financial Institutions Examination Council, which is a great venue to be able to streamline banking examination, both in terms of the relaxation of duplicative requirements by different agencies, and that there's uniformity in how prudential banking regulators approach examination and regulation of banks. We need to have uniformity. Federal Deposit Insurance Corporation has the largest number of community banks under its primary supervision among the 3 regulators, but the Federal Reserve, if I recall correctly, has about 800, and the OCC has a significant number as well. So it's crucial that they have uniform standards that are applicable across all 3 banking regulators.
And I got it, and you're right. And so as FDIC head, you would be encouraging communication. How would you do that?
I would want to take a look at what has been done at the FFIEC in terms of uniformity and standardization of the examination process and regulatory approach to the community banks, as well as the FDIC, if necessary, go through the interagency working group to better understand what can the agencies do.
So you would commit to reducing duplication where you can without harming the safety and soundness of our financial system?
Absolutely, Senator.
Okay. Mr. Workman, and this was addressed a little bit earlier about transparency with the FSOC, but the FSOC underwent a number of changes last Congress. Those included notifying companies when they move between stages, making public the calculation for stage 1 evaluation, providing more information to companies as they go through the annual review. I assume that you agree with those changes?
Mr. Chairman, those sound very good. I'm not absolutely certain of each one, but they sound like they are certainly consistent with my view. Yes.
So once you get into this position, assuming you'll be confirmed, and you look at these changes and you think they are positive, do you think it would be necessary to codify the changes?
Mr. Chairman and Senator, that's sort of slipping into the area of policy and congressional responsibility. So,
but you're right. You're not going to do it. We'd do it. But
yeah.
your Assuming they work, I mean, assuming you think they're good, I don't want to put any words in your mouth, but assuming that they're a step in the right direction, because I think the process does need to be as transparent as possible, your support for codifying those laws could make a difference.
Senator, it's something I would certainly
Okay.
give serious
Good enough.
consideration to.
All right. There's been much discussion on on-ramp and off-ramp for companies as they go through the FSOC process. Would you share your thoughts with me on that, if you think it's a good idea to have on-ramps and off-ramps, and where you would apply them?
Yes, Senator, I do believe that, in fact, this has been articulated in a recent report of Treasury on designations and the deliberations of FSOC. And I think it's important for entities that are being considered for designation and those entities that are already designated, that they have the opportunity to understand exactly what council is thinking and have good collaboration and engagement.
Thank you for that. Dr. Goodfriend, I will just keep this question very, very simple, and it's an easy one. Do you believe that we need a government guarantee and the continuing existence of a 30-year fixed-rate mortgage for housing purposes?
I think the 30-year mortgage is a very popular and useful instrument, and I don't believe it needs a government guarantee. Banks should be regulated, and the economy should be stabilized in a way that these mortgages
Do you think banks would put a 30-year mortgage out without a government guarantee?
to the extent that we have in place government guarantees, if you want to call it that way. It's something that the Congress needs to decide. A government guarantee is not a matter for the Federal Reserve. So I'm happy with that at this point.
Okay, thank you. Thank you, Mr. Chairman.
Senator Heller.
Thank you, Mr. Chairman, and I appreciate our list of panelists. Appreciate you being here, and very grateful that you've to your families for lending you to this process. And I do want to tell the chairman how pleased I am that we have such a high qualified group of panelists with us today. There was no state that got hit harder, and I've said that numerous times here on this committee, hit harder during the economic meltdown than the state of Nevada, both in housing and in banking. We had at one point 60% of all the homes in Nevada underwater, and we lost half of our community banks in our state. Fortunately, that has bounced back. Our underwater is 10–15%, and yet we still don't see a growth of community banks in our state. There's been a massive consolidation of banking in the state, and it has led and coincided to the fact that Nevada is probably one of the most underbanked or unbanked states in the country. And that brings me to you, Ms. McWilliams, and we talked about this in our offices about ILCs. ILCs have played, the industrial loan companies have played an important role in the state of Nevada. And I think there's been a real lack of leadership under the FDIC, under previous leadership, and hoping that under your watch that will change. Give me your thoughts on ILCs and the expansion of them.
Thank you, Senator, for that question. If I can first tell you that I used to live in Stockton, California, which during the foreclosure crisis, when 1 in 33 homes were foreclosed in the United States, had about 1 in 11. So I fully understand the impact of the crisis and the foreclosures in the state of Nevada. With respect to the ILCs, the law of the land is that the ILCs exist. It's a statutory mandate, and the job of the FDIC is to give each ILC application due consideration and, if appropriate, proceed with the approval. I don't know how much work has been done on the ILCs in the last few years. I assume not a lot because I've not seen any new charters. I have a list of the ILC chartered institutions, and if confirmed, I'm happy to work with your office to understand where the holdup has been in the approval process.
And I appreciate that. Do you share the same viewpoint of former chairman of the FDIC that ILCs pose no greater safety or soundness risks than any other charter type?
I do.
Okay. And will you encourage new applications for ILC charter?
I will certainly make sure that the FDIC moves swiftly in due consideration If that encourages more applicants to send the applications in, then I guess my answer is yes.
If an ILC meets FDIC standards, will you support the approval of that ILC charter?
If it means the ILC standards as currently set up by the FDIC, I believe there should be no obstacles in the application approval.
Thank you. Moving to community banks. You talked about regulations. Senator Toomey proposed to you what you would do to make necessary changes to allow and to help support the and encouraging the chartering of these community banks. And you also talked a little bit about Basel requirements. What would you do to stop the consolidations that has been occurring amongst these small and mid-sized banks?
Senator, I'm actually quite concerned about the consolidation, especially in rural counties. Currently, out of 1,048 rural counties in the United States, 625 do not have a locally chartered community bank. And I believe that the number is 35 counties do not have a single banking presence, which is quite concerning because you have small businesses and consumers who have to drive 20, 30, 40 miles to the nearby county to get small dollar bills and other banking services. So it's something I would like to take a look at. In terms of what specifically I would do, I would like to take a look at how the FDIC has structured the regulatory framework around capital and liquidity requirements for small banks. Some of the requirements, I believe, are not applicable, and I would like to revisit them within the statutory mandates currently set up. One example I can give you is the VOCA rule. Community banks do not do proprietary trading. Nonetheless, they have to do compliance, which I can tell you for a bank of the size of my current employer is quite comprehensive. I can only imagine for a bank that has $500 million in assets and 2 or 3 people in the compliance department, it's probably nearly impossible to do an appropriate amount of work to respond to the regulatory burden. So that's something I would like to focus on.
Ms. McWilliams, thank you. And to our panelists again, sorry I didn't get to ask questions, but I want to thank you again for being here and for showing your support. Mr. Chairman, thank you. My time's run out.
Senator Warren.
Thank you, Mr. Chairman, and thank you to each of our nominees for being here and for your willingness to serve. Dr. Goodfriend, as you know, the Fed has a dual mandate to maximize employment while keeping inflation in check. And if you're confirmed as a Fed governor, then one of your main responsibilities will be to set interest rates that satisfy that dual mandate, which means you're going to need to make accurate projections about inflation. So I think it's time to take a look at your track record on how you've done at making inflation projections in the past. In July 2011, you told the Wall Street Journal that the Fed should not be reluctant to, quote, move interest rates up preemptively against inflation at this stage in the business cycle. You also said, quote, the Fed needs to restore positive real short-term interest rates fairly soon. That was 2011. Otherwise, higher trend inflation and inflation scares will force the Fed in the future to more than reverse any short-run gains in employment that it might otherwise achieve in the present. Now, we're almost 7 years past that statement. Meanwhile, real short-term interest rates are still negative, and inflation is undershooting the Fed's 2% target. So do you agree that you got that projection wrong?
Absolutely.
Okay, that's good. Let's take a look at another one. Senator Menendez raised this, but I think it's worth repeating. In May 2012, you said, quote, even if the Fed did succeed in the Herculean task of getting the unemployment rate down to 7%, we could never be sure that unemployment rate was below what we call the natural rate, in which case it would give rise to a rising inflation rate in the next few years, which would be disastrous for the economy. Now, as you know, the Fed did succeed in getting the unemployment rate below 7%, and in the 5+ years since you made that statement, the unemployment rate has steadily fallen, and now it's about 4%. Meanwhile, inflation remains below the Fed's 2% target. So I didn't hear a clear answer in response to Senator Menendez, so let me just ask it directly. You got that one wrong too, right?
let me remember the context. The context was, I think, for this comment, that I was saying if you look at only the unemployment rate and not the inflation rate, you could make a mistake. But as long as the inflation rate was low, I would be in favor of maintaining monetary stimulus.
Well, but you actually said just the opposite in the past, and you talked about preemptively raising interest rates. You know, I'm concerned about this because these wrong predictions are not outliers for you. They have been part of your overall approach to monetary policy, which effectively ignores the Fed's full employment mandate and instead focuses solely on speculative concerns about inflation. This matters because focusing only on inflation does enormous harm to the economy and to working families. You know, you were talking about raising interest rates back in 2011 when the unemployment rate was 9%. A year later, you worried about the Fed letting unemployment drop below 7%. You know, the difference between that 9% unemployment rate or that 7% unemployment rate is the 4% unemployment rate we've got now is millions and millions of jobs, millions of families that have those jobs and are out there working and able to support themselves and their families. I think based on the kind of judgment that you have demonstrated, American families are very lucky that you weren't on the Fed board over the past several years, and I think it would be a mistake to put you on the Fed board now. Thank you, Mr. Chairman.
Senator Kennedy.
Thank you, Mr. Chairman. Congratulations to all three of you. Would any of you disagree with the assertion that we are excessively regulating community banks, defined as banks with $10 billion or less as assets? Would any of you disagree with that assertion?
No, Senator.
Not at all.
Okay. Dr. Goodfriend, I'm sorry, Dr. Goodfriend, I apologize. Do you believe at this moment in time we have financial institutions in America that are too big to fail?
I hope not, and I think given the progress we've made.
Well, I hope not too, but do you believe they exist?
No, I really don't.
Okay. What do you think should and what do you think would happen or should happen if, God forbid, J.P. Morgan Chase knocked on Secretary Mnuchin's door this afternoon and said, we're about to go under, and I need money. I need liquidity.
Well,
what do you think would be government's proper role, and what do you think should be government's proper role?
well, let me say, Senator, I think the issue, you put your finger on a critical issue, and I would hope that the procedures that we've put in place where you would try to go for bankruptcy first and then only to come to the government with some kind of orderly liquidation have been clarified, and the boundaries of responsibility have been put in place already.
Do you think they have been?
Frankly, I think there's reason to go look again and make sure that they're in the right place. This is such an important issue.
I'm trying to understand. I don't, not to interrupt, but do you think they're in the right place?
You know, I've not looked at the details of the proposal, of the clarity of the boundaries, but should I be confirmed as governor, this would be one of the issues that I would like to make sure we're in the right place, because without clarity, without boundaries, we don't have accountability, and that's how we got the Great Recession.
Okay. Do you believe in quantitative easing, Doctor?
Well, it depends when and where it was used. In the crisis,
let me put it this way. Do you think the quantitative easing pursued by the Fed over the last few years in light of the Great Recession of 2008 was appropriate?
I think the so-called QE 1-2, that was during the crisis, and given that we hadn't had the clarity beforehand that I just spoke of, I think it was okay to do that to save the system. QE 3 was not an emergency, and it was more or less used as a routine tool for stabilization. I think that was not called for.
Okay. Why is inflation so low?
We'll take some time to talk about that, but basically...
How about 30 seconds?
I think it's a puzzle, first of all, around the world, so I wouldn't be here and be able to give you the answer. But one reason is that the central banks around the world have put in place a credibility for rising inflation that's cut off the inflation tail, if you will, and plus central banks with policy that's near zero interest have lost some of the punch of monetary policy in that direction. So that would be my short answer.
If the Federal Reserve did nothing, where do you think inflation in the United States would be a year from now?
My view is that inflation is slowly rising. The Fed is more or less on the right path going forward, and I have every reason to think that we could get to 2%, which is a target in a year or so.
Okay. If you were advised, I'm trying to understand your overall philosophy. If you were advising Prime Minister Abe about how to revive the Japanese economy, what would you tell him?
I have been supportive of Japanese efforts to keep monetary stimulus in place until the inflation rate has risen to their target, which is around 2. And in fact, I've been an advisor for the Bank of Japan for years and years.
Have you?
And basically on that side of the argument. So they need to do that.
Yeah. Did you advise the Bank of Japan on the quantitative?
I didn't advise the bank, but I was an honorary advisor to the Bank of Japan.
Okay. And do you think they're on the right track there, or you disagree with their approach?
No, I think in the circumstance, they need to stimulate the economy, get the inflation rate up, and they have been doing well, and now employment is doing much better than before.
Okay. Thank you for that. Ms. McWilliams, what role, if any, do you think the FDIC has in helping us establish a national flood insurance program that looks like somebody put it together on purpose?
Senator, the National Flood Program is a creature of Congress. It's not to the agencies to decide what's appropriate or not. It's for Congress to decide and for agencies to implement.
Right. But I'm asking your opinion. Let me be more specific. How can we, many of our financial institutions do a great job enforcing the requirement of flood insurance. Some don't. And when some get caught, they just get a minor fine, which sends the signal, if you believe in the deterrence paradigm of compliance, which sends a signal that it's cheaper just to ignore the rule. What do you think we can do about that?
Well, I believe,
if anything.
I believe the banks should be supervised appropriately, and if the insurance is not required for flood insurance is not required on certain loans, I think that's a problem.
What if it is required?
If they're in a flood zone.
What if it is required and some, let's say some aspects of the financial system are not enforcing the requirement? What do you think, what, if anything, should the FDIC do?
It should regulate those banks appropriately, which is to find them in disobedience of the regulatory requirements.
Okay. Mr. Workman, why do you think, Senator Timmy made this point, why do you think over the last, let's say, 9 or 10 years, am I over, Mr. Chairman?
Only by 2.5 minutes.
I'm sorry.
Senator Kennedy, I would not dare cut you off during your discussion of flood insurance.
I'm looking at my, I apologize.
I was going to hand this down the aisle there. And
Mr. Chairman, when he talks about
Please,
flood insurance, he doesn't know how
my
to stop.
apologies. I really didn't mean to. It was going up instead of down. I'm over.
It wasn't up to 5 yet, was it?
I'm sorry.
Thank you, Senator. Senator Cortez Masto.
I was having fun.
Thank you. Welcome to all of you. Thank you for your willingness to serve. Welcome to your families. It's great to see you all here. I only have 5 minutes, so I'm going to get right into it, and I'm going to start with Mr. Goodfriend. In your writings, you recommend taxing currency by placing magnetic strips on dollar bills. You argue that in order to keep bills in circulation, the government should tax people who hold money in a disaster kit or safe deposit box. If you are appointed to a 14-year term on the Federal Reserve, will you seek to tax people who choose to maintain a cash reserve?
Absolutely not.
Do you want to explain your discussion on this?
Briefly, yes. I wrote a paper in 1999 for a Federal Reserve System conference, which was asked to what happens if interest rates go to zero, and what could the Federal Reserve do? And in that paper, there are two ways the Federal Reserve could have gone. It could do quantitative easing. That was the first place that was put out. Or it could make interest rates negative. That would also be an option. I didn't propose that. That was an academic paper showing what could be done. And that was forward-looking in the sense that the world went to zero rates and negative rates in some cases.
If you had the opportunity to tax people based on your policy discussion, would you do so?
No. I don't support, that's not a proposal. It was an emergency measure we considered just as a matter of the first thinking on these things before anybody had ever imagined anything would happen like that.
In 2014, the Federal Reserve published research refuting that Freddie Mac and Fannie Mae's affordable housing goals played no role in the crisis. After the financial crisis, analysis by staff for the Fed's Board of Governors found that, and I quote, "The available evidence to date does not lend support to the argument that the Community Reinvestment Act is a root cause of the subprime crisis." It appears you disagree with the Fed's conclusion. Is that true?
No, I don't.
You agree with the Fed's conclusion?
I'm not. I haven't. Maybe you can repeat the question because I was.
Sure. The Federal Reserve published research refuting that Freddie Mac and Fannie Mae's affordable housing goals played no role in the crisis.
It's not a subject that I've had much professional expertise on, so I'm rather not comment.
Okay. Thank you. Mr. Workman, the November report from the Treasury Department essentially called for abandoning non-bank SIFI designations. And the Treasury's General Counsel said that the FSOC would reduce such oversight. Do you think non-bank SIFI designations should be tossed out as a tool?
Senator, I've looked at the Treasury report, and among the areas of recommendation, one is going to, as I mentioned earlier, an activities-based approach. But in addition, there is a line of thought that I think still stands in that recommendation, and I'm reading it as someone who has been studying it of late, but essentially it indicates that FSOC ought to first look at the marketplace, look at what the concerns may be, and then go to the primary regulators, which in the case of insurance are the state insurance regulators.
Right, and for that reason, I'm sorry to cut you off. I only have so much time. But you talk about an activities-based approach, but is the FSOC really prepared to force other federal regulators to adopt those rules?
Senator, I'm not sure. I don't know about that.
Because isn't it true that FSOC would really have little power to constrain risky activities in the insurance industry since it's regulated at the state level?
Well, certainly the state insurance regulators are expressly considered to be primary regulators for purposes of FSOC actions.
Okay, thank you. And Ms. McWilliams, what will you do as head of the FDIC to encourage sustainable home ownership for Latinos, African Americans, and millennials whose access continues to lag?
Senator, thank you for that question. As I mentioned, I lived in the state of California, where the Latino community in particular is almost as prevalent as it is in the state of Nevada. I do believe that the agency's duties are to ensure that banking products are available to everybody. The question that I would like to tackle is how much have the agencies done to encourage home ownership, and what is the appropriate role for the FDIC to partake in that. And if confirmed and I realize that something has not been done, I'm happy to bring you the initiatives and technical assistance should you choose to pursue other venues.
Thank you. I appreciate it. Thank you all for answering my questions. I notice my time is up. Thank you.
Thank you, and thanks for getting us back on track. Senator Tillis.
Thank you, Mr. Chair. I'll keep all my questions
You only
below,
have 3
Senator
minutes.
Kennedy standard.
Just kidding.
Mr. Goodfriend, it's ironic that for somebody whose last name is Goodfriend, it's getting so many unfriendly questions. But I have a question for you, and it's really just, can you give me your thoughts on what you think is more corrosive on the middle class, low growth or low inflation?
I think, well, low growth is probably the more corrosive in the sense that growth enables a lot of things to get done. People can live their lives. The country can do more. And low inflation, unless it's too low, is, I don't think, anywhere near as corrosive.
Thank you. Ms. McWilliams, I've got a hypothetical situation. You mentioned, I think, in response to Senator Toomey's questions, that community banks or smaller banks are not subject to Volcker rule. They don't do proprietary trade.
They are subject,
Yeah.
but they shouldn't be because they do not engage
Let
in
me give you a
proprietary trade.
hypothetical situation. Let's say that there's a bank out there that wants to go green, and it's going to take a little while for them to get there. And so in the process of coming up with a viable strategy for a community bank, they all of a sudden get involved in a business activity which makes perfect sense for them to go green. But it actually makes them wade into something that falls under Volcker. Can you give me maybe a scenario where we talk about the cost? I'm trying to also interpret that in terms of the regulatory cost impacts on smaller institutions.
Certainly, Senator, and I have actually, am aware of financial institutions that are trying to go green and made a commitment on being fully green by a certain period in time. They would change the light bulbs, windows, et cetera, but they would have hundreds plus or 5 branches, and getting branches to the point of a green standard is costly and a multi-year effort. So some of the banks have engaged in purchasing green credits, basically renewable energy purchase agreements. And in order for a bank to actually engage in that discussion, it needs to do an appropriate Volcker compliance. So I'm aware of a bank that had to comprise a committee of 22 people and have multiple meetings on whether the purchase of the green energy, the renewable energy contract would in fact trigger proprietary trading under Volcker, which I believe undermines the purpose of the act.
Yeah, and I think it undermines the objective of the industry trying to go green. I mean, to me, it's a good working example of why we need to right-size regulations and remove some of these impediments that simply don't make any sense. So thank you for that. Also, on the cost-benefit analysis, has there been, when we talk about cost-benefit, and I think the chair and Senator Shelby asked the question, I don't think we really do a good job of explaining at the atomic level, the consumer level, the price that they're paying for regulations. And I was just there was one example, it was in the Wall Street Journal earlier this week, that one of the major banks are now going to not allow free checking for certain accounts that fall below a certain level. In some ways, I've got to believe that's been stimulated by pressure on the cost of doing operations. They've got to find revenue somewhere. They have fiduciary responsibility to their investors to try and provide a return on their equity. Has there been much work done at that atomic level to say when you implement these additional regulations, which may go further than you need to, beyond the right size of a regulation, the real individual impacts? Do we ever do cost-benefit analysis at an atomic level, and should we?
Senator, I believe that we should. How much has been done is difficult for me to ascertain because a lot of that work is behind the scenes. So what you would see in the Federal Register in terms of the proposed rulemaking or the final rulemaking is just the tip of the iceberg. I know for a fact when I was at the Federal Reserve that we struggled at times with ascertaining how a certain regulation would impact consumers, but it's a task that should be undertaken anyway. The regulators should not shrink from their responsibilities because it's an easy thing to do. I believe that they need need to engage on a deep level to understand who is going to pay for this, how it's going to affect the communities, and are we willing to live with the consequences.
Thank you. And Mr. Workman, I did not have an opportunity to meet with you in my office. I do know that you met with my staff, and I know it was a productive meetings, and you've answered a lot of the questions that I've had for you, so I won't ask them again. We are working on a bill, particularly around Fed supervisions of savings and loan holding companies and getting them right-sized. I look forward to you after you're confirmed to working with you and having my office. I want to congratulate all three of you. You're outstanding nominees. I look forward to supporting your nomination, and congratulations to your family and friends. It should be a very proud moment for you. Thank you, Mr. Chair.
Thank you.
Thank you. Senator Jones.
Mr. Chairman, thank you very much, and thank you for the nominees to be here. Congratulations to you and your families. Ms. McWilliams, I especially appreciative of you being here with your role with my colleague, Senator Shelby, and your work with him. I know that you probably also learned a lot about something else very dear to Senator Shelby's heart, but I'm going to resist the urge to give you a pop quiz about University of Alabama football.
Thank you.
But I do appreciate your comments, your questions to previous questions about community banks and underserved areas. That was an issue, and I appreciate your answers to that very much. So let me move to Dr. Goodfriend. I'd like to go back briefly to comments you alluded to earlier and some earlier comments in 2010 where you referred to consumer protection as a false premise and essentially said that consumers should be left to police themselves. I agree with you, consumers need to take personal responsibility, but I also think there's some kind of bad actors out there. The Federal Reserve has a division of Consumer and Community Affairs known as DCCA. And reading from the mission statement from DCCA, it says, it is to support the board's efforts to implement federal laws intended to protect and inform consumers in credit and other financial service transactions, ensuring that consumers receive comprehensive information and fair treatment, and promoting economic development and community lending in historically underserved areas. And I will tell you, Dr. Goodfriend, Alabama has a lot of those underserved areas. So my question is, if you are confirmed by the Senate, would you continue to support the DCCA's efforts to not only inform but to protect consumers, and would you recommend any changes to the division's mission?
I would absolutely support that mission. What I think consumers need to have regulation on the product side, and they need to be informed. These are two halves of making consumers protected, and I absolutely support the Federal Reserve's mission.
All right, and the DCCA mission as written, you wouldn't make any changes to that to lessen anything?
Well, if confirmed as a governor, I would like to look into this, because I think it's so important that we maintain confidence in consumers, the confidence in the market system, the ability to make that system work absolutely depends on consumers feeling confident in the way as demanding customers and feel safe in markets. So that's absolutely a goal that I would support.
Okay, fair enough. I also have seen comments that seem to be a little bit conflicting in the past, Dr. Goodfriend, in which at one point you had talked about that you seem to advocate for a very independent, activist Fed that should push back against Congress, but in recent years you seem to have pushed back for less independence of the Fed, including Congress appropriating the Fed's budget. In my view, independence is important, especially in our current economic and political climate. So can you give me your view now? How important is the Fed to be an independent body?
Absolutely. The Fed needs to be absolutely independent of politics so we can do monetary policy, financial regulation, in order to support the dual mandate. That's something I completely believe in, and I have said so many times in many papers in the past.
Do you still favor Congress appropriating the budget for the Fed?
I don't favor that.
Okay. Have you ever favored that?
No.
Okay. Maybe I was mistaken. That's, I think, all the questions I have, Mr. Chairman. Thank you. Thank you to each of the nominees. I appreciate your being here.
Thank you, Senator Cotton.
Thank you all to the nominees for your appearance. Congratulations on your nomination. Congratulations to your families as well. Ms. McWilliams, the FDIC recently proposed a new rule for high volatility acquisition, development, and construction loans, also known as HVADC, that would replace the current rule on high volatility commercial real estate loans. I'm concerned that the proposed rule would remove contributed equity exemptions for future acquisition, development, and construction loans and would instead treat them all virtually the same in terms of the risk assessment. And it strikes me, therefore, that the regulators will be ignoring the proactive steps that lenders are taking to, in essence, get a bigger down payment, to put it in layman's terms, to reduce risk and therefore increase safety and soundness. The House has already acted on this measure. The House Financial Services Committee passed a bill 59-1. It passed the House chamber by a voice vote. I suspect the Senate will soon. Could you commit that you will take a look at this issue and perhaps hit the pause button until the Congress has a chance to review it this year?
Senator, thank you for that question. Since the rule is at the proposed rulemaking stage, I'm not sure when, if I'm so fortunate I would be confirmed to be able to take a look at the rule and understand what work the FDIC has done behind the scenes. But if it does happen that I'm confirmed before the rule is finalized, I would certainly like to know what the staff at the FDIC has done. As you know, the rules are subject to Administrative Procedures Act, so there's a notice and comment period during which the FDIC rulemaking process will be informed from comments from various stakeholders and affected entities, including consumers and users of this type of credit. So I can assure you that if I get confirmed in time, I would like to take a look at those comment letters as well and understand what's going on.
Good, thank you. Because there's both a process point and a substantive point. The process is if Congress does finally get its act together and take legislative action on this, I don't think we'd want to go through the whole rigmarole of notice and comment rulemaking with a final rule that will simply be modified or overturned. Then the substance of the point I made about not discouraging lenders from entering into these loans with high equity contributions by making them be treated in the same fashion in terms of risk assessment. Second topic, FDIC obviously plays a large role in the supervision and enforcement of the Bank Secrecy Act and anti-money laundering regulations. That's a topic that this committee has increasingly scrutinized over the last month. How right now would you assess the division of responsibility for anti-money laundering regulations and the Bank Secrecy Act compliance between the FDIC, FinCEN, other regulators, and financial institutions?
So the BSA and the MLA regulations are promulgated by FinCEN in conjunction with the regulatory agencies. It is the job of the regulatory agencies, in this case the FDIC, to examine and ensure compliance with both BSA and MLA. So the actual work gets done at the FDIC level, while the rulemakings and the requirements get set up at a multi-agency effort.
Are you open to reviewing those processes and trying to find ways that we can both still be strict and prevent, intelligence officers, terrorists, drug runners, deadbeat ex-husbands from manipulating our banking system, but at the same time reducing the costs that we're imposing on gigantic and tiny institutions alike?
Senator, absolutely. And I can tell you from my current experience, banks are required to file suspicious activity report, or SAR, every time they either there's a dollar threshold or they suspect a certain activity is taking place. I think it's making it more difficult under the current regime for the regulatory bodies to examine effectively and efficiently for SAR's compliance and MLA and BSA violations when you have as many SARs filed as we do under the current framework. So I would like to take a look if it's possible to streamline while maintaining safety and soundness of the system.
Good, thank you.
Thank you.
Mr. Workman, the FSOC's process to designate systemically important financial institutions has been a topic of conversation here, to include about non-banks. I'd like to ask at a philosophical level, given the criticism the FSOC has received about the opacity of that process, do you think that the criteria by which the FSOC makes these judgments should be more like a posted speed limit, encouraging people to stay on whichever side of the line they want to be, or a speed trap, hiding in the trees to catch someone once they cross unstated criteria?
Senator, I like the posted speed limit.
I do like the posted speed limit as well. I think it's consistent with the rule of law and a well-functioning market-based economy. My time has exactly expired.
Good timing. Senator Reed.
Well, thank you, Mr. Chairman, and welcome to the witnesses. And I apologize for my tardiness. Senator Cott and I were at a classified hearing on the nuclear posture review, so nice to be out here with you all. Let me ask a question to each one, beginning with Ms. McWilliams. Cybersecurity is becoming increasingly critical to every aspect of American life. And so as in your different roles, FDIC, Federal Reserve, and FSOC, can you give a brief statement about what you think you can do and should do immediately with respect to cybersecurity?
Thank you for that question, Senator. I can tell you for a fact now that I work for a regulated entity that it is one of the foremost issues on the mind of the governing body at the bank, as well as the board of directors. I believe that the regulator's job is to provide a blueprint how banks are supposed to handle cybersecurity breaches in terms of notifications and just giving a sense to the public and to Congress as well what a regulated entity is supposed to do if there is a cyber breach. I understand that in 2016 there was an advance notice of proposed rulemaking by the Federal Reserve, OCC, and FDIC seeking comments on and input on how the cybersecurity framework should be structured, and I would like to follow up, if confirmed, to understand what kind of comments have been received and what the FDIC can do.
Thank you. Dr. Goodfriend.
I completely agree. This is a very important issue, and I will do what I can, if confirmed, to lend my support and whatever expertise I can to this.
One of the things that we've done, several of my colleagues and I have legislation that will require a simple disclosure in publicly reporting companies that they either have someone on the board or they've made arrangements to deal with the issue of cybersecurity, so that it's an action-forcing device for every company. Does that make sense to you?
You know, as a principle, it makes sense to me.
Thank you. And Frank, Mr. Workman, please.
Yes, Senator, certainly cybersecurity is a critically important element in the insurance world. I would just observe two actions that have been taken, one by the New York Department of Financial Services. I'm sure you're well aware of that, but they acted early, put together a proposal, took it to the NAIC, and it, to a very large degree, influenced the NAIC action just this past year. The New York reg is nearing completion of implementation, and the states now have a model from the NAIC. So I think much has been done, but never enough.
Thank you very much. And Frank, the Rhode Island Superintendent of Insurance supports our approach too. So they're very bright, Rhode Island. I can't explain it, but they are. Forgive me. Turning quickly, Dr. Goodfriend, when Governor Powell was here, he testified in response to my questions about the Orderly Liquidation Authority. He said that his preferred option is bankruptcy. However, he indicated there may come a time when bankruptcy is not going to work in a very stressful situation that really threatens the economic health of the country, just like what happened in 2007, 2008, and 2009. In that case, we really need a backup in the form of something like Orderly Liquidation Authority. What's your view of the Orderly Liquidation Authority?
I agree with Governor Powell's statement. And I think this is a very important matter. It deserves, I think, reconsideration, given how important it was that there was lack of clarity and boundaries when we had the last crisis. This is so important that I think it deserves another look. And if I'm confirmed as governor, I would certainly make this a priority.
But I think we have an Orderly Liquidation Authority in place. So the look would be to
make sure that it would work in practice. I haven't seen it in detail. I think there's plenty of opportunity to kind of model this thing and in various ways and check whether there is clarity, there are boundaries that make accountability for all the actors that would get involved in this Orderly Liquidation Authority, to think through scenarios in which that would work. And this is so important, again, that I think it deserves another look.
And the look would be, as I presume from your comments, would be to ensure it works in practice, not that it be abandoned or ignored.
Right. I have no predilections one way or the other, but I do believe, knowing what I know about the subject in general, these things are complicated, and I think we haven't gotten to the end of the line yet on where we want to be.
Thank you very much. Thank you all.
Thank you.
Thank you, Senator Reed. And we are going to have a short second round. I'm going to yield my 5 minutes and turn to Senator Shelby.
Thank you. I want to follow up just for a minute on the area that Senator Tillis was going to earlier. Cost-benefit analysis, explaining what regulation costs, what are the benefits for it to the consumer, because we're all consumers. I agree with him. I don't believe that's been explained. Oftentimes the regulators, y'all will be regulators, come up with regulations, and we said, gosh, they make no sense. Or at least some of us, maybe we're laymen and we don't know. But how do we actually develop the methodology, which is important? Dr. Goodfriend, you understand this well. The methodology is important in arriving at something.
That's right.
And what are you trying to do? You're trying to arrive at the truth. How can we help consumers make good choices? We know we can't do everything. Or how can we put cost on them, regulation that increases the cost of doing business, and it ultimately falls on them?
Well,
yes, sir.
In terms of principles, I think I agree completely with your description of the issues. There has been a tendency in some quarters to think, well, first of all, I should say, I think consumer protection is critical. So to me, it's a question of where we want to put the emphasis. We want to balance. We want to put some of it on the firms, but we also, I think, need to really focus better than my sense is on consumer knowledge, educating consumers, because that would mean that consumers could be in charge of their own lives. Right, and I think, and really the only way to prevent consumers from really being exploited is to put them in the driver's seat, make sure that they're aware of what products are doing, and that's where I would be in principle. And my sense is that we've been doing some of that at the Fed, but I think there's scope for doing more of that.
Ms. McWilliams, you have any comments on that?
Senator, I can give you my commitment that if confirmed, cost-benefit analysis is something that I would like to take a close look at the FDIC. As somebody who worked on regulations and had to take into account in some rulemakings thousands and thousands of comment letters, it is crucial that we understand how our regulations are going to impact consumers before we promulgate them. So yes, you have my commitment that I will take a look at that.
Thank you, Mr. Chairman.
Thank you, Senator Brown.
Thank you, and I will make this as brief as I can. Mr. Workman, again, welcome. Yes. Based on the $50 billion bank threshold in the Wall Street Reform Act, the FSOC uses a $50 billion threshold as a factor to determine if a shadow bank could cause systemic risk, as you know. If the chairman's bank dereg bill is enacted, would you recommend that FSOC also raise its threshold fivefold to the $250 billion that the chairman is suggesting?
Senator, I can just say that's treading into an area I have not yet adequately learned about. So I can't really speak on that issue.
Okay, thank you for your candor. There's a reasonable chance that you will be asked to at some point.
Yes, indeed.
You understand that? Okay, I appreciate that. Ms. McWilliams, it was an honor to speak to you, and I look forward to meeting your Cincinnati family in a few minutes after we're done. Vice Chair Quarles last week promised to the largest banks that the Fed would soon weaken leverage rules. Reported this is despite resistance from FDIC. The chairman's bank dereg bill would undercut the leverage ratio for some of the nation's largest banks. Democratic, Republican, independent FDIC officials, Chair Grunberg, Chair Baer, Vice Chair Honig have all warned about undermining capital standards that, like leverage limits, they'd harm financial stability. If confirmed, will you protect the Deposit Insurance Fund by continuing the FDIC's opposition to weakening leverage rules for the largest banks?
Senator, thank you for that question. If confirmed, it is going to be my mandate and my duty to protect the DIF. I would like to take a look at the leverage rules. As you know, the Federal Deposit Insurance Corporation does not have large banks as its primary supervisory entities. The largest bank in the FDIC portfolio does not rise to the advanced approaches level of currently set at $250 billion. So the leverage rules for smaller banks should look a little bit different than the rules for the largest participants. So I can assure you that I would like to take a look at that and make sure they're applicably and appropriately calibrated for the size, scope, and risk of the bank.
Would you agree that a central cause of the 2008 crisis was too much leverage at the largest banks and a failure of risk-weighted capital standards?
Senator, I don't know that I can agree with that statement wholly. I would want to understand the context in which it is made.
Well, the context was what happened a decade ago was a central cause of the 2008 crisis, too much leverage at the largest banks.
And so the FDIC just recently issued a report on the crisis and its, I think it's its outcome. And I have to tell you, I have not gotten through the entire report fully in preparation for the hearing, but I'm happy to circle back on that question with you when I am done.
The Minnesota Fed recently recommended a leverage ratio of 15% to protect Americans from future bailouts. Dr. Goodfriend had said he doesn't think there are banks that are too big to fail. Some here think that, some don't. I just want to urge you to look into the fact that weakening the leverage ratio for the largest banks can be problematic. I mean, our job here is to collectively is to protect the safety and soundness of our banking institutions. Not that I'm not accusing you of this for sure, but not to protect the largest banks and not to enhance the profitability of America's largest banks. Thank you to the three of you.
Thank you. And that concludes the questioning and the hearing, with the exception of final announcements. Before I do that, though, I want to thank all of you again for coming and participating today and being willing to serve your country. And again, extend thanks to your families for supporting you and helping you to be able to do that. For all senators, follow-on questions need to be submitted by Tuesday, January 30th. And for our witnesses, responses to those questions are due by the following Monday morning, February 5th. And so please respond quickly when you receive questions. With that, this hearing is adjourned.